Right, people, welcome back, DeFi House. And in this video, once again, because I'm getting a lot of feedback and I'm able to observe what kind of questions people ask, what kind of things people notice, etc., when it comes to DeFi, I want to make this video with some of the observations and answers, especially when it comes to the differences between trading and actual DeFi investing, because people tend to misunderstand DeFi a bit. Okay, especially when you are a complete beginner, when you're just getting started with what is that, the whole liquidity pools, lending, borrowing protocols, what's happening, right? And and people tend to think that it's just another some sort of a crypto, almost like a scam related stuff, almost like trading pools, whatever, right? So in trading, right, your goal is to profit from the price movements, right? So your aim is to find something that is undervalued with the expectance of that thing becoming more expensive in the future, right? So you want to buy something that is cheap and sell that thing when it becomes more expensive, right? So basically profit from the price movements. It involves in both ways. You can long or short. Shorting is of course when the market drops and you have a short position. um, I will not go into trading specifics, but essentially your goal is to profit from the price movement, especially when it comes to crypto. And I'm not speaking about active day trading crypto, but actually just spot holding or long-term holding. You want to buy something when it's cheap and sell something when it's expensive, right? So price movement, meme coins, everything. People are trying to find the next 100x, all of that nonsense, etc. Some people do find it, 99% will never find it. Those that find it usually lose it all again due to the lack of mindset shifts, right? Also, trading as a thing, it requires constant attention to charts and market moves because you are watching the price action of some sort of an asset, and you expect that chart to show you some sort of patterns, right? Technical analysis, bullshit, all of that stuff, where you think that when certain elements hits, support, resistance, trend line, Fibonacci, the moon turns 54 degrees, and then you will be buying or selling all of that stuff. um, you are pretty much dependent on the charts, right? You have to be dependent on the charts and price actions, some sort of rules and patterns. Also, trading involves a lot of guesswork because at the end of the day, no matter how technical analysis rich you are, how many different candlestick patterns etc., at the end of the day, it involves guesswork. You buying or selling, shorting, longing any kind of asset, you will never have certainty what's going to happen, right? Even if you think that your strategy is amazing, and it could be amazing, still it involves a bit of a guesswork. And for the majority of people, beginners and standard traders trying to make it out of the um, just trying to make it in life, in financial stuff, etc., right? It usually purely guesswork. They just watch some courses, trading analysis, or buy some signals, all of that stuff, and they just try to guess what's going to happen. And at the end of the day, trading feels more like an active job, right? Because you were trading, you were watching the charts, the news, everything. You are buying and selling, speculating. So it feels like a active day job, right? Of course, there is a separate part of trading that is more like holding for long-term perspective, swing positions, etc., which is a bit of a separate thing that is also not related to DeFi. But when it comes to DeFi itself, the goal is to earn yield, or so to speak, passive income, by providing liquidity, staking, lending, etc. There are many sub sectors in DeFi. The main thing is, of course, liquidity provision, because you know it's even funny that quite a lot of people think that it's some sort of a magic when they swap. between two assets in their wallet. So, for example, the most recent thing, right? The whole hype on Solana meme coins, base meme coins, whatever, right? People go to Phantom Wallet and they swap some Solanas to meme coin or some Solanas to USDC, locking in the profits, or buying Solana from USDC using their Phantom Wallet. They just swap, and there you have it, right? You swap the 5K USDC to some Solanas or meme coins, doesn't matter. And a lot of people have no idea how it works behind the scenes. And it works behind the scenes only because of people like me and maybe you that are involved in DeFi and are providing liquidity into those pools to assets. For example, Sol USDC. The fact that you are able to swap between Solana and USDC freely on your wallet, on the centralized exchanges, etc., is because of people like us that provide liquidity to that pool. So when you swap, you pay the fee. That fee goes to people like me, right? That's where the yield comes from. If no one is trading on dexes or on specific pair, then there is no yield. If a lot of people are trading, there is high volume, then people are paying a lot of fees because each trade, each little swap is paying a fee, and that fee goes to people like me, liquidity providers, right? So DeFi also doesn't require staring at charts all day because basically what you do, you set the ranges. I mean, everyone has their own methods. I have mine. I showed you on YouTube here. You can go watch the previous videos. You will learn everything. You will be able to start yielding on your day one. I showed you enough education for totally for free, so you can make your first money easily. Just watch it with attention, right? And that's it. So you don't have to be staring at the charts all day. There is no point. You set the ranges more or less. The range can be wide, so you will be in range for longer, and you will have lower returns, but you will not. You don't need to manage that position very often. Or you can make tight ranges that will require a lot of management and attention, but your returns will also be higher. Okay, the returns come from the fees, rewards, and yield rather than price movement, which is the most important thing. As a DeFi investor, I don't care if the price of the asset is going up or down, sideways, 45 degrees up, whatever it may be, in circles. It doesn't matter. All I matter is that people would be buying and selling, clicking buy and sell on a constant basis as much as possible. That's what I care about, because when people are trading, people are paying fee. When people are paying fee, I get paid, and all of the DeFi liquidity providers. So we don't care about DeFi. We don't care about price movement in DeFi. Yes, there are some importance because our money in liquidity pool is also dependent and is exposed in parts to volatility of those assets. So, for example, if you have money deployed into Sol USDC pool and the price of Solana massively increases or decreases, this will affect our value of the deposit, of the liquidity provision, but not the fees, so to speak, just a little bit. So even though to make money, I don't need the price to go up or down or whatever. I just need for people to trade. And I even love it when people are actually fighting, buyers and sellers are fighting constantly, because then the price moves sideways with high volume and I get a lot of fees without being exposed to too much of a volatility in up or down of the asset itself. But I mean, what I'm trying to say is that we don't need to catch something at the bottom, sell at the top, or short at the bottom and close at the top, or whatever it may be. Short at the top, sorry, and close at the bottom. We don't need to catch price movement. We need to find liquidity pools that are generating good yield, are not extremely volatile, and set logical ranges so we are earning the fees no matter what, right? Yes, it can become an active thing if you decide to live of DeFi like I do, I have to manage quite often my positions. I have smaller positions. I have leveraged DeFi positions. I have a lot of different things going on. Yes, I have to manage that, but that's my passion. I love it. So there's not a problem. But I'm not trading. I am in DeFi, which is two separate things. I don't need for the price to go up or down. I don't need to catch or find undervalued coins or specific coins, nothing like that. I need people to click buy and sell on the biggest assets: ETH, Solana, Sui, AVAX, everything. Doesn't matter, right? So DeFi lets you earn no matter the market conditions. That's the most important point to understand. When the bear market begins, right? The majority of people on Twitter, on X, yeah, whatever, on Telegram, they go silent because the market drops. Nobody is buying their KOL posts. Nobody is actually trading. Nobody is making money when the bear market hits because people are always FOMOed in at high prices, and now the market dropped, so they remain silent. They wait for the market to come back, and this could be years of waiting, or they sell at the worst prices in a loss and just continue and just move on, make more money by working, by doing something right, reaccumulate capital and redeploy again, and then once again they try to make it through trading, while DeFi lets you earn no matter the market conditions, because always someone is trading on DEXs. If not people, then algos, bots, whatever. The volume is always here. The amount of volume differs, right? Sometimes you have very high volume, sometimes low volume. But there is constant movement in DeFi, and more movement is coming on board. More and more money, more and more protocols, chains, opportunities, everything. So even at the worst case scenarios, when the bear market is heavy, I remember that very clearly. I was still able to make about 4% monthly just by providing LP, and with smart rebalancing systems that I just know how to do. And I showed some of it on the YouTube and inside the DeFi House is all in detail. Um, it's just DeFi becomes just yes, the returns are smaller, but they are constant, predictable, and you can still make good money. It just depends on your capital size. But even these days, leveraged DeFi positions are also becoming a thing, and it's a really amazing thing because you're able to go ahead and during the bear market conditions when the market is already at the bottoms, right? You don't expect a lot of continuation to the downside, right? You can execute into DeFi liquidity provision using leverage, borrowed capital, etc., and make even better returns that are predictable. So at the end of the day, it all makes sense, right? And DeFi lets you earn no matter the market conditions, which is the most greatest thing that crypto has to offer, in my opinion. And DeFi is the professional approach to the market. Meme coiners, traders, future traders that are usually selling some kind of a courses or referral links to their Bybit accounts, whatever it may be. Uh, at least from what I saw, what's popular. Um, it's not that professional approach because it works while the market is going up, and usually 90% of those people go silent when the market goes down, and that's because they are involved in trading, which there is nothing wrong about it, but it's just two completely separate topics, trading and DeFi. So I wanted to make this comparison video so you understand the core differences between DeFi and trading, because some people message me saying that they are closing their DeFi positions before sleep so they are not exposed overnight. And it sounds like trading, which is definitely not. DeFi is not. My positions are open and in range for months. My SUI position that I have with a wide range, I am in range for now almost 7 months, and that position is always making me yield. That's it, always generating yield. So there is no need to treat DeFi investing and pools, liquidity pools, as trading. It's a completely opposite thing from trading, right? You let them trade, right? You make it happen because you provide money into the pool. Doesn't matter how small your amount is, but still you contribute to the pool so those traders can actually trade. That's it. So in DeFi, you want to leave speculation and hopium for the trenches, right? They can gamble, they can find those meme coins, random coins, and try to make it out of the trenches, as they speak in that degen type of language across the market in general. But even if you want to gamble on some meme coins, it's better to deploy some part of your capital into DeFi, right? Into the biggest pools, Sol, ETH, AVAX, right? Just a few examples. So then use the generated yield to fund all of those shit coins, meme coins, whatever it may be, adventures, right? That would be a better approach rather than just always trying to find and buy the next 100x. That's my opinion. And I used to do that as well. I used to trade full time, not in crypto, in other markets, but upon finding DeFi, building DeFi protocols, etc. myself, uh, with teams raising capital, everything, it was a very good adventure, and I just understood that DeFi is the actually professional approach to the market. And what's coming on DeFi, people, institutions, projects, everything, um, from now towards 2030 and beyond, all of the opportunities in stables, in volatile assets, in very risky assets based on DeFi is just endless. Opportunities are endless and they let you earn no matter the market conditions. It all depends on your goals and capital size. But even small capital can definitely benefit from DeFi, because if you learn how to constantly predict, constantly yield from DeFi with high predictability, so you know what's going to happen at least more or less on your returns over the next month, the next month, the next month, right? So you have predictable income, cash flow. In DeFi, if you can manage that with small capital, then it's very easy to find access to bigger capital. So I always say DeFi might require higher capitals to make a living or something, right? To see significant income, but the skill is more important, because the skill of knowing how to trade NFTs or meme coins is not long term sustainable. So what that you know how to launch NFT? Nobody cares these days, right? So, but if you know DeFi, no matter if you have money or not, but knowing DeFi, knowing how to yield, how to find opportunities will always be here, will always be a valuable skill for the future, especially for the future. So, in my opinion, DeFi is better place to be rather than trading actively and trying to find that next 1000x or something. So these are the differences between trading and DeFi investing. Hopefully, it's now much more clearer what is DeFi all about. And make sure to watch on my YouTube from lesson 1 to lesson 10, where I show every little step, how to lend your crypto and borrow against it, how to deploy into the yield, how it works, how to deploy into the LP, how to yield, how it works, why it works, how to set the ranges, right? What's the whole thing with impermanent loss, how to set up the pools, how to manage the positions. Everything is on my YouTube. So just go ahead and actually watch it from start to the bottom, start to beginning, start to beginning. No, start to end. Just watch it, the whole videos, and you will have a very clear picture. And then after watching the videos, you will be able to go ahead and deploy your first 10, 50, $100 million into the liquidity pools and see the results for yourself. It's very simple. It's very simple. So hopefully it's much more clearer now. And thanks for all the messages, for follow, for the subscribes, for messages, comments, everything. Really, really appreciate that. And of course, as always, I will see you on the next video and inside the DeFi house.